The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Well, happy Thursday. Welcome to this edition of the Small Cap Roundup. I just want to get started today with the stock that everybody's talking about, and of course this is anything but a small cap. I put up a chart of Apple, and it actually, the reason I wanted to start with Apple today is because it does bring us to a point about extended stocks that is really applicable to a lot of the smaller names that are out there in the market today. Obviously not getting the attention that Apple gets, but there are quite a few extended stocks. I was on a LinkedIn conversation last night with our guest from the other day, Jerry Slusowitz. If those of you who were listening, you heard Jerry, terrific advisor, terrific asset manager with a lot of great insights into how small caps fit into an overall portfolio. And also joining us in this little LinkedIn exchange last night was Brian Anderson, another terrific asset manager. I've interviewed him for Money Show. Now, they were kind of going back and forth about Apple, and I think they were both making terrific points. Jerry was noticing, of course, which I agree with, that there could be some risk in jumping to the Apple trade at this point, although obviously traders and also some longer-term investors continue to do that, obviously because the stock is continuing just to move higher and higher. But I would agree that it's historically proven to be riskier to buy in after an extended rally because a pullback at some point is inevitable, of course, even with Apple, even with this juggernaut. Now, we talk about that concept a lot with regard to the smaller caps, and of course, it's true with any market cap stock. However, as Brian Anderson was pointing out, the fundamentals remain strong, and of course, that is what drives the technical action. So he was saying a pullback could be constructive and offer the next technical entry point as it rallies out of its next base or find solid upside support at its 10-week average. And that's exactly the same message that I continue to emphasize in this show with all these stocks that we're looking at. Using the charts to make buy and sell decisions on technical strength. And also, we'll be using that methodology in the newsletter that we will be rolling out here in the next few weeks. Very excited about that. I'll be looking at buy and sell points on low-priced stocks and small caps. So just kind of wanted to use Apple as a very prominent example of how that same concept really applies to stocks of all market caps. Couple things just to add. I want to share some news today from the market just about some new stocks, a new ETF. But before I do that, if you want to follow me on Twitter, I'm at Kate Stalter, and I will follow you back. Send a little shout out to let me know that you're a listener here. Would love to be interacting with you on there as well, at Kate Stalter, pretty easy. And also, I'm very excited about our guest we have on later in the show today, Jim Rohrbach. He is one of the renowned trend followers. He's a regular speaker at the Money Show events. If you've been to any of those, particularly the ones down in Orlando, I was very fortunate to get to spend a little time with him down there in Orlando at the World Money Show last month, and I'm honored that he is able to come on the show and join us a little later on today. So that should be a lot of fun. You're going to want to stick around and hear him. Now let's see. The Russell has a new small cap high dividend yield ETF that begins trading today. And I looked up the symbol a little earlier. The chart was not yet ready for that. I'll try it again right now. DVIS is the ticker. No. Okay. So we don't have that one there yet, but that is one that is due to begin trading today. And you know, obviously there wouldn't be you wouldn't see anything on there as of yet, but sometimes they do get the charts loaded up on these software programs in advance. just to get prepared to show the trading results. So let's see, yeah, Russell Small Cap High Dividend Yield. That's kind of interesting. And the description is the fund seeks investment results that closely correspond to the total return of the Russell U.S. Small Cap High Dividend Yield Index. So no big surprise there what it's going to be tracking. Let's see. So that's due to launch. So that should be interesting. We can take a look at that. We had a guest from Russell on the show maybe a month or two ago. Would be interesting to bring back some of these spokespeople from Russell, talk a little bit about some of their small cap vehicles, some of their analysis. Always pretty interesting. We've also got a couple of new IPOs today, and let me see if I can get these charts up here on this particular chart program. Once again, sometimes they load them up, but of course we'll see some trading on the stocks. So let's see if they have this up here. They may not. Let's see. Allison Transmission. Okay, there we go. And if you're looking on Tiger TV, you do see just one great big block of trade representing today. This is actually a mid-cap. It was part of General Motors. They make automatic transmissions for commercial vehicles, trucks, military vehicles. Now this was, as I just mentioned, part of General Motors. It was sold to private equity and all that big reorganization of GM a while back. And it was spun off as a public company. As of today, it began trading. So that's an interesting one, although apparently from what I just saw, I believe it priced at 23, so I'm looking on the chart here, 23.33 was the most recent tick on here. So yeah, so despite kind of all the hoopla, and again, this is one of those cases where I think the media was interested because of Allison's GM pedigree, but nonetheless, there's actually another IPO that you're not hearing quite as much about today that had a bit of a better, little bit of a better debut, and you can actually see it on here. This is Demandware. DWRE is the ticker on this one. Now, this is a small cap. I believe its market cap is a little bit shy of 300 million. Let's see here. Yeah, about actually around 292 million. So, you know, and that'll be changing obviously, but that's this will be a small cap. This company priced at 16 this morning, I believe, and getting quite a boost. Maybe I'm wrong about that, but it did get quite a boost. Actually, no, that's about right. And it's up to 23 as of now, 23.82, so a nice boost here on its first day of trading, the less glamorous of the two. And you know, I'll have to look into this one a little bit more. I've just been tracking this for the past few hours today after I noticed that it had been priced last night. And you know, a lot of these smaller tech companies, there will be a low float on the IPO, so that will cause some of that nice jump in the first day. So it'll be interesting to take a look. But you know, both of these we could be tracking them to watch how the fundamentals are panning out, how the trade looks. And of course, if Demandware is a small cap that does perform well, it could be one that we will be watching in the upcoming newsletter. So that's one to an interesting one this morning. Kind of caught my attention with that big jump higher on its debut. All right, I want to go to another stock here. I talked about this one. I think I talked about this one both in my show on Tuesday as well as when I guest hosted for Tom on Tuesday afternoon. That was after the close. This is Francesca's Holdings, F-R-A-N. It's a small cap. It's a chain of women's clothing stores. Now, this is, and you know, if you've listened here since we launched the show, you know that I do like to follow some of these IPOs. They can be among some of the market's best performers. I want to go over here and just come back to the daily, but let's take a look at the weekly chart so you can see how this one has done recently. It went public back in July of 2011, so you do see down here right in the autumn last year when the general market was tanking, so was this particular stock. And it had a price high, let's see, I was talking about this the other day, of 27.06 back in November. And it was interesting because when I was talking about it on the Small Cap show on Tuesday, the price had not yet reapproached that 27.06 high, but by the afternoon it had done so intraday. Now, I was considering that particular stock in buy range at that moment, although I don't like to make a move ahead of earnings. So where does that leave you if you miss the kind of gap up that a company like this will make after it reports better than expected results, a great outlook, and as you probably know, the outlook is frequently what will send a price higher rather than just whether or not it beats views. And where does that leave you? So I was mentioning on Tom's show that I was reviewing a presentation by Gil Morales and Chris Ketcher. They're the authors of How to Trade Like an O'Neill Disciple. A presentation they did for Traders Expo back in November talking about buying on the gaps. And there are a number of very successful traders who use gap buying and shorting on the downside as their primary methodologies. So I really found this presentation quite interesting. Let me read some of the bullet points from Catcher and Morales because this is relevant to a trend-following strategy. When a stock gaps up on tremendous volume, the argument has been won decisively by buyers. Well, that's very true. And you know, one of the key tenets I was taught by Bill O'Neill is you don't argue with the market. So in this case, the market is telling you the buyers are in control. Next bullet point, the power or decisiveness with which this argument is won is characterized by sharp upside price movement accompanied by a significant increase in trading volume, the signature of a buyable gap up. And Francesca's holdings gapped up in, let's see, more than 6 times average volume following that, and that would have been in Wednesday's session, following that better than expected earnings report after the close on Tuesday. Okay, so met that criteria. This same, next bullet point here, this same tremendous buying volume is a clear sign of huge institutional buying done with conviction. Well, that's right. That's not your next door neighbor who's making those big purchases, sending the stocks higher. You know, it always kind of amuses me when people get in some kind of maybe, you know, trying to launch some kind of online movement saying, hey, if we all buy 1 share of stock today, that'll support the market. Well, no, it really won't. All right, there's my music. I have a little more on Francesca's I want to talk about because I think this is a terrific example of the kind of stock I'm looking for, the kind of trading pattern. So stick around. We'll be right back after this break. I'm Kate Stalter. This is the Small Cap Roundup.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay. Back with this segment of the show, and just a reminder, please stick around. You're definitely going to want to hear the conversation with Jim Rohrbach coming up after the next break. And the number here, 877-927-6648, if you want to give a call. Okay, I want to just continue what I was talking about prior to the commercial there. Still looking at this chart of Francesca's Holdings, FRAN is the ticker, as an example. And this company, just to review, it's a women's clothing chain, went public back in July of last year, has a market cap of nearly $1.3 billion. You know, as, let's see, trade about 500,000 shares. So that's actually pretty decent liquidity. That's actually a good sign. I like to see that, especially on a stock with a market cap as small as this one. Okay, so before the break, I was talking a little bit about some of the bullet points from a presentation by Gil Morales and Chris Catcher, who are just 2 authors and portfolio managers who I think have done a tremendous amount of work in contributing to the body of knowledge on trend following, and they really continue to. You might want to check out their blog. I believe it's thevirtueofselfishinvesting.com is where they blog. So anyway, one of the bullet points they were discussing back at the Traders Expo presentation is the contrarian aspect of these gap ups. That is so true. I mean, it's already a contrarian aspect to think about buying into strength. But if you combine that with a major high percentage gap to the upside, you're doubling down on your contrarianism in that case. So what they wrote here is the contrarian aspect in that most investors don't believe the gap. I'm not sure. Well, I think the point being don't believe the gap and are afraid to buy because they think it is too high. I think that's the key part right there. Are afraid to buy because they think it's too high. So, just kind of, let me see here. I want to go over now to a daily chart, and I don't mean to belabor the point on this one little small cap stock, but it is just a very interesting sort of case study that does show some of the methodologies that I do like to use, and it just ties in very nicely with what Katcher and Morales were writing about here. So what happened, the stock did gap up in yesterday's session. You had some monster volume. It actually reversed and finished at its session low yesterday. Now, profit taking is not unusual in these kind of situations among value buyers who came in at a lower price and they would like to pocket some gains, move on. But even with a little consolidation, this is one of those situations where you can monitor the stock. You can sit tight as long as it doesn't fall more than maybe 5% or so from your purchase price. Now, the stop would vary. The actual stop would vary depending on the individual stock's price. However, in this case, it is rallying back today. We're seeing a gain so far today of almost 4% from yesterday's closing price. So far, so good on this one. So just another one. I mean, this is a perfect example of the kind of stock that we will be tracking in the newsletter. Let's go to GNC, which is a ticker. If you were listening to the show when I guest hosted the other day, when Tom so graciously allowed me to sit in for the final hour of his show on Tuesday, really a pleasure and a privilege to be able to do that. Our guest was my friend and former IBD colleague, Ken Shreve. And Ken was talking about adding to his position on GNC. Now, this is a mid-cap and not really the kind of little too big for what I would be tracking in the small cap and low price newsletter. However, I also do like IPOs, and that is just something that I tend to look at and to follow. I mentioned them quite a bit on this show, obviously. A lot of them, these mid-cap recent IPOs, had started out as smaller caps, so they are exactly the kind of names that we might come into, and then you'll see that market cap growing. Now, Ken was talking about adding to his position back here. Let's see. I think this is also a gap-up situation that he was talking about. Yeah. That was on Tuesday. He did the very same thing. He jumped in there on a heavy volume gap up. So you do see a little bit of consolidation here in the past few sessions, and that's exactly what I was talking about. Nice tight trading action right here. So this would be the kind of thing you'd want to just sit through and be a little bit patient. Okay, stick around. We will be back. We'll be joined by Jim Rohrbach in the second half of the show. This is the Small Cap Roundup.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back to this segment of the Small Cap Roundup. In breaking news, Apple continues to trade higher. Okay, as I've been promoting for the entire show, I am very honored to welcome our guest today, that he's here to spend a few minutes with us. I've talked numerous times about great trend followers whose work I have just devoured. Jesse Livermore, Nicholas Darvis. Of course, as I mentioned frequently, I was trained by Bill O'Neill at Investors Business Daily. I also mention trend following author Michael Covell frequently as an influence. And today, our guest is one of Michael Covell's influences. So I am pleased to welcome Jim Rohrbach. Thank you so much for joining us today. And Jim, your company is Investment Models. So maybe you could just start out today telling our listeners a little bit about your methodology and how you analyze stocks and the broader market.
I've been timing the market for 40 years, and I'm still in business. Isn't that something to talk about?
It certainly is. That's right. And when everybody says it can't be done, well, tell us how it can. Right?
You know, it's unfortunate. I can talk a little bit about my business. What I do each day is mathematically I interpret what the market did for the day. And then the mathematics converts that interpretation into a number. That number represents the trend. Now, if the market's going up for several days in a row, that number will go up, and vice versa. It's that simple, and it's that precise. And the one thing interesting about mathematics, it doesn't listen to what's going on in Greece, what's going on in Washington, how big the debt is, and what's going on politically. It's mathematics. So it's very precise, and it works. The sad part about it is there are very few people who can time the market, and therefore they say it can't be done. Mm-hmm. And today, the only way the average investor can survive is knowing when the trend changes. It's not sticking in the market when we go through another 2008 and watch their portfolio drop 50% and having a professional say to them, it's okay, just relax, everything is going to come back. Well, if you're a retired person, those are the people I'm really interested in helping. Mm-hmm. You can't relax. You can't give back 25 or 50% of your life savings if you think you're going to survive through 25 years of retirement, which is very possible now. So what else would you like me to say?
Well, how about just kind of segueing off of that and talk a little bit about what the mathematics and the trend are telling you about the broader indexes at this point, Jim?
Okay, the market right now, I got a buy signal on the New York Stock Exchange on December 22nd. Last year was the toughest year I have ever experienced in 40 years. And it was tough because we got whipsawed. Now, if you were around and watching it closely, you know that the market was going up 200 points, down 400, and that kind of crazy stuff. Enough to get you in and get you out. And it can become a little bit expensive when that happens. But you have to stick it out because you never know when the big one is coming in the up direction or vice versa. So on December 22nd, it seemed to clear out all that whipsawing, and I got a buy signal. I stayed in that up signal until last Tuesday, a week ago, and I'm sure you remember that the market got smashed on that one day because, again, the talking head said it had a lot to do with what's going on in Greece. Mm-hmm. Well, we've been hearing that story now for over a year. It's time they changed it. But the market dropped over 200 or 300 points. It took me out. And I really thought that it was the start of another downtrend. Of course, I always think that when I get a sell signal, and I always act on it. But it turns out that it turned right back around again, and we got in on this Tuesday. Mm-hmm. So it is a bit confusing. But if you stick with the trend, you will catch the big up move and you will avoid the big down move, and that's the name of the game now. The buy and hold concept died. In fact, I wrote an 8,000-word article. It's on my web page that says buy and hold is dead. That article alone will assure that I'll never be on CNBC or any of the other financial news networks. They don't want to hear that.
Right. Well, you're welcome on here anytime. Let me go back to December because I put up a chart of the NYSE composite up on our Tiger TV, Jim, so people who are watching that along with us could see it. So I'm looking at what happened back in December. You had a big percentage gain on the NYSE composite on December 20th, and it added to that on the 21st. And then you had actually a 1% gap up, it looks like, on the index on December 22nd. So what caused a buy signal for you on that day?
Well, I can tell you what causes it. And are you looking at the NASDAQ or New York?
The NYSE composite I'm looking at.
All right. What causes a buy signal or a sell signal is this mathematics I talked about. And if it triggers a plus 12 on the New York Stock Exchange, this number is called the RIX index, it's a buy signal. And if it then turns to a minus 12, it's a sell signal. Now, what can happen sometimes, and it's fortunate it doesn't happen often, we can get into a loop, like on a computer loop, where it goes up enough to get you in and then takes you out again. And that can become very frustrating for anyone, even me, except that I'm a mechanical investor and I follow every signal, because I've learned over the years that if I follow every one, I will catch the big up move and miss the big down move. But it requires me to accept every one and know that in some cases there are going to be losses. I'm glad you talked about Michael Covell. Anyone who is interested in understanding that concept of trend following should really read his book, Trend Following. He doesn't pay me to say that. It's a wonderful book.
It is. I agree.
So
let me ask you this. Oh, go ahead.
I keep plugging. My mission is to help people. I'm going to be 81 years old, and I don't need to be doing this anymore, but I'm having a hell of a good time. And I have the realization that I am helping people who sit across the table and look at their financial statements and watch a 50% drop while their professional says it's okay. It's not okay. And I'm here to help them. Anybody that wants help in the area of knowing when to get in, get out, I'm here to help them.
I mean, I've got to tell you, Jim, I interview a lot of people. I mean, you saw me down there in Orlando a few weeks ago doing a lot of interviews. And, I do hear from quite a few advisors who do seem almost at times cavalier about keeping clients fully invested through some kind of downturn like we saw in 2008 and early 2009, and just kind of simply smile and say, well, it'll come back. Well, I think that's pretty cold comfort in a lot of cases.
Well, it's the only thing they can do. I was invited to be a judge at a conference at the local college here for 4 universities that were making a financial presentation on a company. And I don't know how they found me, but I was given the opportunity to question the kids. And I asked a couple of technical questions. And afterwards, the professor said to me, these students have been told to do their analysis strictly on fundamental analysis. I said, well, nobody told me that. I didn't know that. I'm a technician. He said, it's okay, Jim, because you startled them. And we could see their reaction to a subject that they weren't familiar with. And then it says to me, now we're talking about a college teaching kids about finance, but they don't teach them about technical analysis. And I say they don't teach them because they don't know how to teach them, or they don't know how to analyze it. When they say that the kids have to do the analysis strictly on fundamentals, then they're positioned to analyze fundamental stuff, but not technical stuff. It's a sad commentary on our modern education because, man, you better know something about changes in the trend of the stock market or how to identify. I could tell anyone right now how to do that on an individual stock basis. Should I tell them?
Absolutely. Let's do it.
Okay. This applies only to individual stocks and not to the overall market. My mathematics is a little more complex. But if you have a stock that you're following and you put on a 9-day exponential moving average and an 18-day exponential moving average and plot that against your stock, even if it's Apple, you can tell precisely when you should get in and when you should get out. And that is evidenced by a cross. In other words, some people call it a golden cross. But when the 9-day crosses up over the 18-day moving average, it's a clear signal that the trend is up. And vice versa, when it turns down, it's a clear signal that it's a sell signal. And I mention Apple because one of the problems with some investments is they don't follow the trend of the market. In other words, the market can turn down and Apple can keep going up.
Mm-hmm.
And how do you know that? How do you stay with it as long as you can? This is a tool. Nobody's going to tell you about this tool. And most people will ignore what I just said. But it's their folly. Because it's one of the best, if not the best, indicator of how to know when your stock has turned up or turned down. Now, to supplement that, if you really want to get with it, I'm not here to sell anything, but you need to know when the market changes direction. That's what I do. I do the market. You pick the stock. You manage your money. No commissions. Beautiful.
Mm-hmm. And that kind of goes along with one of the things that I was always trained by Bill O'Neill at Investors Business Daily about: let your winners run.
Yes.
Not to bail out of them. Hey, I want to comment on something else that you were talking about regarding financial education. And I know that because I went through an MBA program. And I got a lot of classes in finance about the fundamentals, a lot of fundamental analysis. And a lot of these folks go into their investment banking jobs, and that's what they continue to use there. So it's really no surprise to me that that's what institutionally in the wider media, that's what we continue to hear about is fundamentals, because that's what people are taught over and over again. Hey, we had a question from somebody in the Tiger Den here. We have a little chat room here, Jim, where people can wander in. And somebody was asking about ETFs. Do you use a similar methodology with ETFs, Jim?
Oh, yeah. When I'm saying I identify changes in the trend of the overall market, you can use ETFs. You can use individual stocks. You can use the S&P 500. Whatever you want. As long as I say you should be doing it with the trend. You don't want to go to the barbershop and get a hot tip on a stock, come home and buy it, and then find out that the trend of the market is down at the time. It's better off buying it when it turns up. Mm-hmm. Yeah, you can use everything with it.
Oh, that's great. Well, that leads into something I was wondering about then. And we have about a minute left, so we got to be a little bit brief on this one. But how about shorting? Do you use these signals to determine when to short a stock?
Shorting is for professionals. I short, but I'm a professional trader. And I say that because only 1 out of 10 short traders is successful. Did you know that?
I didn't know it was that bad. I knew that a lot of people entered in there and did not have success.
Guys
wow.
who know what they're doing are fine with it. They have the emotional stability to handle, what do you call those, short squeezes?
Mm-hmm. Right.
But yeah. I do it, but I only do it when I don't recommend it to my subscribers, and I only do it when I have this strong feeling that something is bad. Okay. And I got that feeling last year when we heard all those rumors about downgrading the U.S. rating system.
Okay.
And I said, that sounds bad, okay? And
very
so before they announced
Hey, can you stick around? Do you have another minute? You want to stick around? You want to finish that thought after this break?
I'm not doing anything.
Okay, great. All right, this is the Small Cap Roundup. Stay with us.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. The Futures Hour, next on TFNN.
All right, the final segment today of the Small Cap Roundup. We're talking to Jim Rohrbach. Now, Jim, we have just a few minutes here, but I wanted to let you finish the thought about shorting. And I'm very glad you said that you really don't suggest that most individual traders get into that, because I do see people kind of rushing in, wanting to short based on some opinion just because they think it may be time. And tell me, how do you measure whether or not it really could be a viable opportunity for yourself?
2 indicators. One, I want to see my RIX index on a sell signal. I would not short while it's on a buy signal. Mm-hmm. And then, as I said to you before, it's a gut thing. I don't usually pay much attention to the news, but if there's something that sounds really strange or that could lead to a big drop in the market, I'll short it. I'm also very eager to cover that short because I'm not going to take a big loss. So basically that's it. You can't listen to the stuff on TV and make judgments based on what you hear on a day-to-day basis. In fact, isn't it interesting that last Tuesday, a week ago Tuesday, the market took a big drop because they were interested in what was happening in Greece. And then this Tuesday it went up, and they said, it went up because things seem to be resolved in Greece. You know, this is kind of childish stuff.
I read an article recently. It could have even been Covell. I actually don't remember who said this, but somebody was talking about 23-year-old writers at some of the news services, people just fresh out of college who are kind of just making up some reasons for why this or that may have happened in the market. And that made me laugh, but there's probably some truth to it.
Well, when I talk, sometimes I say that in New York, there's a big whiteboard in one of the offices, and on the left side it has reasons why the market went up today, and on the right side it has reasons why it went down today. Because, you know, every day there has to be a reason, right? So the market closing, it's a down day, and all of these experts get into this room and they look at it, and geez, we haven't used number 4 for a while. Let's use that one.
That's great. Well, Jim, really super quick question for you. We've got a minute left, so we're going to have to cut this one very short. But how do you recommend setting stops or determining when to either cut losses or keep your gains? I know I gave you a minute.
I don't need stops. My RIX index tells me when to get out, and that acts as a stop. Stops are kind of tricky, and you can get stopped out. But if you know the trend of the market, you don't need stops. When
Makes
Jim
sense.
Orbach issues the sell signal, you get out.
Okay. I've actually been told we have a little bit longer here, about a minute and a half. My clock is a little off. So let's just wrap up today. What would be your sort of final parting words of wisdom to our listeners? And I've gotten a lot of comments about this interview here in our chat room, so I think people are really enjoying hearing you today.
Well, I'll tell you, don't listen to the people who say that you can't time the market. It's true that you can't if you don't know how. But if you can find someone who can do it, I'll say I'm the guy right now. I've been doing it for 40 years. I have people whose main concern is my longevity, and they feel like I'm helping them.
Very good.
And I'm very relaxed when it comes to investing. I sleep a lot. If I get a buy signal, I put my money. I use the S&P 500. I think in terms of a broad investment.
All right, Jim, there's our music. We got to go. I want to have you back on the show sometime. Let's do this again. This was awesome. All right, everybody, thank you so much. I'm Kate Stalter. This is the Small Cap Roundup. I'll be back with you on Tuesday. Have a wonderful weekend until then.